I choose a stock of the day, and we have so many stocks to choose from with over 20 companies handing down numbers, but you can't go past BHP and Woodside, their news that dropped overnight in the UK. BHP speeding up its exit of oil and gas, selling its petroleum business to Woodside, which will in turn create a top 10 independent oil and gas producer worth $38.5 billion. The move will see BHP exit from the UK stock exchange and only be listed here in Australia. It's got a dual listing at the moment. Had a dual listing when it merged with BHP, when it merged with Billiton. And it comes as the mining giant reporting underlying earnings at a decade high. On the flip side, so there's BHP's earnings, profit $11 billion, underlying profit $17 billion, record final dividend of $2 a share, almost $6 billion in capex for expansion into the Jansen project, the potash project. On the flip side, Woodside first half numbers remiss despite rising 17% on the back of surging oil demand. The market is split on the plans for it to take on BHP's oil assets and questions around the value of the deal for Woodside shareholders. So that's just a summary. Michael Wayne, market really doesn't like the deal, does it? What do you think of it?
Well, I mean, this sums up reporting season. There's an awful lot going on here with BHP. Obviously, they had their results, but in and around all of that, they're exiting the petroleum part of their business. They're entering potash. They're now spending, I think, about $500 million in unifying their 20-year-old dual listing. So there's a lot of different points that are probably feeding into the share price there. But looking at the petroleum and the oil side of the business, BHP really spent years building up that part of their exposure to energy. You might recall they had the shale oil exposures in the US, which they ended up selling at a large loss going back a couple of years now. They're now looking to exit completely with this deal with Woodside Petroleum. In some ways, it might be driven by ESG. That could be definitely a catalyst to it. But the fact is that the energy assets were one of the few growth assets that BHP had. Or that might be a little bit of an extreme way of putting it, but those assets were meant to have a lot of growth potential in them, but they've obviously made a decision to concentrate on their core operations being iron ore, copper, and to a lesser extent coking coal. They will end up with a fair amount of cash out of this, and that will arm the arsenal to go out there and potentially take on another acquisition or a new deal, which always does concern me at these points in the cycle. But you do see this really across many businesses, across many different sectors, whether it's the banks or Westfield in the past. They build up these diversified operations before sort of hiving assets off over time. So it's not uncommon, but very interesting and probably a positive for Woodside in that sense.
Okay, so how do you rate BHP and Woodside? Would they be buys for you on this?
Look, neither of them are buys at this point. The problem for Woodside over the last 5-10 years has been, although it's had very high quality energy assets with cost of production in the lower quartile globally, they have lacked the growth assets. They've had a very mature business and very mature growth profile with declining mine lives or resource lives. So this, I think, is a net positive for Woodside because it does give them access to what are some decent quality growth assets potentially. But I would like to see them pull it off first. And BHP's done a terrific job over the last couple of years. We've got clients in there, but at this point of the cycle, it's hard to keep piling new money and chasing the price higher. We do think that iron ore potentially will continue to soften as demand from China eases and some of the production comes online from Brazil. We do think copper looks very, very good, and that's definitely going to be a positive for BHP. And the coking coal price seems to be pretty buoyant. So there's definitely some positive drivers for BHP, but at these levels, we just give both a miss.
Yeah. Henry?
David, this is a transformational deal. This is turning the juggernaut that is BHP, this absolute behemoth in the mining industry, into a 20th century boy, in the words of the great Mark Boland. this is out with the old and in with the new to some extent. We've got a new CEO in terms of Woodside with Meg O'Neill, who has now been confirmed as permanent CEO. But more importantly, BHP is shedding its oil and gas assets, as you say, and moving into nickel and moving into potash. It's very confusing at the moment because on the one hand, you've got the driving force is the arbitrages, because collapsing the dual listed structure with those PLC shares in London and the ASX listed ones here is creating a bit of a strange picture. We've got BHP down 6% here, and in London they were up 3% and ADRs were down 8%. So there's a lot of players at the moment that will be buying the London PLC because it traded at nearly an 18% discount. And you'll remember some years ago, Elliott Advisors were trying to get BHP to collapse this structure, and BHP said, no, it's too expensive to do it. Well, clearly there are costs involved in this, and the costs at the moment are being borne by the Australian shareholders because they're seeing their shares come down as UK shares go up. We need to get this back into equilibrium because they will be pari passu, which means they'll pretty much be the same instrument in the months to come. And so we need to get this out of the system before we can make any real judgments. For me, BHP Australia is looking interesting at these kind of levels. What are we, 48.30 at the moment? Stunning set of numbers, stunning dividend. BHP very much got its mojo back, and Rocky Peter O'Connor from Shaw and Partners talked about this before, how BHP had become a Monday company rather than a Friday company. People were excited to come to work. This is a very exciting development for BHP to push into potash, to push into nickel, to continuing to push into copper, and to stamp their ESG credentials and to stamp their intent in becoming a 21st century company rather than looking back at 20th century fossil fuels is a significant, very significant move for the company. And it's not going to come without some pain, at least in the short term. It's going to cost them $300 or $400 million just to collapse this structure. And the arbitrage guys, they're going to be buying houses in Mossman for years to come on the back of this, because it's just going to be absolute heaven. The Elliott Advisor guys must have just cleaned up being short ASX and long PLC shares. And the same thing happens in the US, of course, because those ADRs, you can break an ADR into ordinary shares, BHP, ASX shares, and similarly, you can convert ASX, BHP into an ADR. There's a 2-for-1. So they're trading at equivalent, they fell last night by 8% as people were buying those PLC, selling the ADRs and selling ASX shares. And this arbitrage is going to go for some time. As far as the Woodside deal goes, I think it's a positive deal for BHP. It's a positive deal for Woodside. They needed something. They needed to get big or get out to some extent because it's a big players game, and now they are one of the top 10 players. I'm going to wait to see how the dust settles on this one. They're both probably a hold at the moment, but I think once the dust does settle, it's going to be interesting to see how it goes from here. But BHP has been very brave, as Sir Humphrey would say.
Okay, 2 questions. Henry, Woodside's been a serial underperformer, been horrible. Will this make them a star, or will they bugger this up as well?
I don't know about buggering it up. I think the problem is that they've had this sort of Damocles hanging over their head in terms. There's these massive big assets around that Chevron, various other players have been putting up for sale, and the Scarborough project, the FID is still pending on that one. So there's a lot of pieces in this chessboard that are moving, and it requires money and capital and access to that capital. I think a bigger Woodside with a new CEO who obviously can drive a hard bargain and has ambitions beyond what we saw Peter Coleman do when he was in charge, I think is a positive for Woodside, and we may see the better days ahead for Woodside.
And secondly, for Australian shareholders, listed shareholders of BHP, would you be taking advantage of the pullback as all these sort of smarty arbitrages muck the market up?
Well, I don't know about muck the market up, David. I mean, at the end of the day, BHP, because of this dual structure, they had this big discount in London. Now, the London shares should trade at a discount because they don't get the franking benefits that Australian shareholders get. So there is a discount there. hopefully it will close up relatively quickly. And we saw that, we've seen a 6% fall in BHP here and a 3.5% rise in BHP in London. So that's already closed up 9.5% out of that 17% discount that it was. So it is moving in the right direction. There's probably a little bit more movement to come. And then once they've stabilized, then they can trade together, if you like. So a move in ASX will require a move in the PLC. So I think this is starting to look pretty attractive at $48 and change, I've got to say. But I just wait a few more days for these arbitrage boys to sort out their lines of credit and get their positions well and truly on and start counting the money.
Okay.